This is the movie in the world which has the longest kissing scene. And I'll give you a hint, it's an Indian movie.
Don't tell me this is that old black and white movie, the first movie which had a really long one.
So you have to tell me the name?
No, I have no idea. I know that there was a black and white movie.
So there's a movie called Karma, which has kissing between Devika Rani and Himanshu Rai.
There, yeah.
1935.
I didn't know it was the longest.
It is actually the biography of Devika Rani, who was the first Dasa Phalke award winner. Is written by Kishwar Desai and it's called The Longest Kiss.
Oh my God, okay.
So
I mean,
I'm getting all excited.
Are you even above 30 or less than 30?
No, I'm 42.
Do we have something on aging or something? Because this guy is like, he'll like defy aging here. Has it aged? Okay, are you serious?
Yeah.
So you must be like an ultra marathoner or some endurance trainer or something.
No, not at all.
42.
I don't do anything.
Kiss chakke ka aata. As the ad goes, kiss chakke ka aata khate. Chalo, anyway, guys, let's go. Akshay, welcome to Paisa Vaisa. Thank you so much for doing this for our listeners.
Thank you so much. Thank you so much for having me here.
I have never ever, in my 6+ years of doing this podcast and 400 episodes plus, never had an actuary. What is an actuary?
Okay. An actuary is an interesting question because I get asked this a lot. An actuary is basically, the way I explain it, it's like a chartered accountant for the insurance and the pension sector. And you have to give a series of exams to qualify as an actuary. And you have an Institute of Actuaries of India under which you give the exams. And what you basically do, you do the whole financial and risk management bit for the insurance and pension sector. Those are the historical sectors what actuaries used to be involved in. Obviously, now they've branched out into other things in the BFSI domain. But yeah, historically, the entire actuarial studies are based on insurance and pension concepts.
So basically, if you want to become an actuary, then insurance is pretty much the only place where you would be,
As a start, I guess. But like I said, now we have branched into other areas like banking, investment banking, quants and stuff. But yeah, traditionally it's insurance.
And if any of my listeners are out there saying that he or she wants to become one, what would you tell him in terms of what education he should do? Where should he go? What should he look up?
So basically, you have to be good at maths. That's the start. There's an Institute of Actuaries of India, which conducts exams to become an actuary. And those exams are taken while you work. So typically you will study and work together, and you'll have to clear about 15 exams to become an actuary. They take about if you really work hard, then you can qualify in 3-4 years. Typically, average qualifying time is 5 to 6-7 years.
Interesting.
And you can give them at home while working.
Very interesting. Yeah. Sounds like you said, the CA of insurance.
Yeah,
it sounds very similar to
CA of an insurance.
Yeah. Okay. Coming back to our discussion, we are in 2023 now, and we've had 3 years of the pandemic. Hopefully, it's over. How did that entire experience, the lockdown especially, how did that change India's approach, our approach in general to life insurance?
So I think it really brought the concept of life insurance to the forefront. Those who had life insurance and if they needed one, realized the importance of it. And those who did not have life insurance and needed one also realized the importance of it. So I think it definitely improved the awareness, just to give you a perspective. And I've been in insurance for the last almost 20 years. But nobody ever before the lockdown would come and talk to me, Akshay, I want to buy some life insurance, help me decide a product or a company or something. But the number of queries I got from my friends, my extended family, my cousins, my ex-colleagues and all was quite a lot. So I think everybody realized that this is a product which is needed very much as part of your financial portfolio. And, now people are rushing to buy it, buy life insurance. And hence I feel, it's done wonders for the awareness for the product and the industry.
Awareness is one thing, penetration is another. Where are we on those numbers?
So penetration, I'm afraid, still needs to grow up because life insurance as a concept and as a product is actually not that straightforward, and it deals with a very taboo subject. It deals with death, right? So, what will happen to you what will happen to your family if you're not there? So, this concept of life insurance is actually something which will take time. It has a lot of challenges in terms of penetration increase, especially in a country like India. So penetration is still low, I would say. It's making progress, but it's still low. But yeah, awareness definitely increased. And I think eventually one will follow the other.
Have you ever met anyone who said, because we are here in urban India and I don't know, our listeners probably would also be from metros and tier 1 cities where awareness is much more and therefore hopefully penetration is also higher.
Yeah.
You met anyone who said, I don't have life insurance, and what are the reasons? If you ask him, typically, do you have any? I mean, people who don't have life insurance, what are the reasons?
So I have actually, in fact, most people I don't have life insurance, and I actually almost tell them off as, what's wrong with you? You need to have the basic term assurance at least. And I think the reasons are just, सोचा नहीं कभी, इसकी क्या ज़रूरत है, कुछ थी तो सी पॉलिसी ली थी LIC से. So I think it's a plethora of reasons, lackadaisical attitude, इसकी क्या ज़रूरत है, पेरेंट्स की पैसे हैं या पुश्तैनी पैसे हैं, all those things. So generally people don't think about these things, whereas this is one of the first things one should think about when you start earning, I feel. But
why? I mean, when if the same guy asks you, I don't have insurance, why should I have insurance? What would be your answer? So
my basic thing is, you are maintaining a certain amount of lifestyle. Do you think if you're not there and your income goes away, your family will be able to manage the same lifestyle? And when somebody goes away, obviously, there's a lot of emotional and, emotional stress, grief and all. On top of that, the last thing you want is financial stress. So I think this is one thing only a life insurance product can do. I used to really like the tagline LIC used to say, Zindagi ke saath bhi, zindagi ke baad bhi. Because that's really very important. No other product does it. No other product will give you that protection of your family. No, for example, I have life cover and I sleep a lot more peacefully at night because I know something goes wrong, my family will be protected, and that's a huge relief because as a person with wife and kids, I want to ensure that they live a happy and fulfilling life, and who's to say what's going to happen in life. In fact, pandemic, if it all has taught you is that life is hugely uncertain. One stupid virus emerges from China and the whole world goes for a toss. In our languages it's called 1 in 200 year event. And that which is expected never to happen, it did happen. So uncertainties are everywhere, and life insurance is a must.
Has business picked up after that? I mean, did people think, and actually go out there, buy life insurance for themselves? And how is the situation now?
So business definitely has picked up. Part of it is the general picking up of business. Part of it is indeed, like I said, in fact, I must have recommended over the last few years at least 10-20 people who have just personally on my recommendation. They came and asked me, and I told them go and buy life insurance, and they did. So, there's definitely an increase in awareness, and business has picked up. Definitely more needs to be done, for sure. But it's in the right direction.
Let's see if we can do some of that more, as we talk about this topic on this episode.
Sure.
So there is another set of people who think that I'm kind of sorted because my company has life insurance policy for me, which I think a lot of people have that as CTC, right? I mean, when they offer.
Correct.
What's your view on that?
So it's great to have it, frankly speaking. But, is it enough? Certainly not. And I'll tell you multiple reasons for it. First, you're not going to stick with one company all your life, right? You're going to be changing companies. So if you're going to move companies, the next company may or may not offer the same kind of benefit. And you're not going to leave a job just because they don't offer life cover, right? So it's extremely crucial to have some amount of cover on your own. Because, you move a company, they don't have life cover, you have to go and buy. And at that point in time, you're older. You may have a health condition, which means buying life insurance becomes slightly more challenging. Why wait for that? The second thing is in a company cover, typically the cover is flat and your liabilities are anything but flat in your life, right? You will start earning, then you'll have dependent parent, then you'll get married, then you'll have kids. So the whole plethora will happen. You'll buy a house, so your liabilities will only increase, whereas the cover will remain flat. So I think you should always consider topping up your life cover. Life cover from a company is great, but always consider topping up.
And it's flexible. You can you can design your own product.
Yeah, and you can decide what you want. Because again, the cover provided by a company will be plain vanilla, But the cover provided by what you want, for example, you might want disability insurance on top of it. You might want critical illness insurance on top of it. So those things you can decide in a private cover yourself over and above what you have from the company.
It's kind of weird. And a lot of people actually don't know this, that life insurance is actually flexible. You can keep on adding a lot of covers on their own. And, we'll get into all of that on the other side of this break. So, folks, that I hope you've understood, if you do not have a cover, please consider one. We're going to get into the exact products right after this small break. We'll be right back. Coming back in 3, 2, 1, and go. And welcome back. Okay, Akshay, I am someone who has just started his career, whatever. I'm 25, 27 years old. I did my MBA and I've got my first job, my first salary. and I'm now, I'm earning.
Okay.
Hopefully I'll get married, kid, blah, blah, the whole thing.
Yeah.
For someone who just starts off his career, what would you tell him?
So, again, life insurance is something, a lot of people think, I'm just too young. Why do I need life insurance? But I think it's like with a lot of things, it's better to start early. So, because, eventually you will have liabilities, you will get married, you will probably have kids. So you will need all these things. And starting early has a lot of advantages. For instance, for a start, you're young, which means your age is less, your premium is going to be lower, right? Especially if you're buying term cover and stuff like that. Second is, you're not likely to have any health ailments. So for example, if you buy life insurance at 25, you like to be fit and fine, you'll get the cheapest cover. If you buy life insurance at 40, you may have developed, say, some health condition, asthma, or, something like that. So the chances of you getting the same amount of cover reduces because the life insurance company will also assess. So that's the first point. Second point, when you're buying, so suppose you want to start saving for your future expenditures. Again, if you start early, you'll get better returns, and also you will be able to start small, right? So if you want to, if you have a particular sum assured in mind in the end, and if you start early, your monthly installments or your annual premiums will be lower.
Yeah.
So I think you should start looking at investing as soon as you can, or insuring as soon as you can.
Put some numbers here. Okay, for using the same example that you did. Someone who starts at 25.
Okay.
Someone who starts at 40 and has some, general, not too serious health issues.
So, for example,
and let's take a crore.
Let's take a crore.
Okay, let's go.
So, at say at 35, for instance, if you want to buy cover for a crore, you might spend like 15-20 grand a year. But if you buy at 25, that number will be, say, less than 10. So it's like quite low as compared to, and imagine, this is not just one time. Now you're paying it for the next 20-30 years. So it does add up. So it makes sense.
I want to ask you, you're an actuary. I've never had an actuary in the show. I want to ask you criteria. Okay. Because this is interesting. I mean, you guys have this list of industries where people are at slightly dicey jobs. And you've got this whole chart because when you're giving a cover to someone as a company, you're basically assessing how soon can this guy die. Okay.
Yes.
Okay.
Yes.
And
crudely put.
Mere ko kitna fatka padega. Okay.
Correct.
Can you just for the curiosity of our listeners, can we just figure this out?
So basically, we assess data. Basically, we look at past experience of population, of company, of the industry, and figure out how soon the general population is expected to. Mortality.
Yeah,
I'm trying to figure out to use a sensible word.
Mortality is a nice. I'm just helping you out there. Let's not talk about people dying.
Let's say
mortality.
Yeah. So then you start bifurcating into by age. So if somebody who's age 25, what is his probability of dying over the next year? Somebody who's 30, and so on and so forth. So that is general population. So from the general population, you start getting into specific populations. For example, there is a concept called underwriting in insurance. So basically, where I'll assess your health. So if I have assessed your health, your chances of your mortality is expected to be better because you've gone through this checkup. You've gone through the medicals. I've asked you a number of questions. So then there'll be a discount on it in some sense, crude word. That if the general population has a life expectancy of say 60 years, this guy, the insured guy, will have a life expectancy of say 65 or 70 years.
Okay.
I'll allow for that. Then I will split the data further, like women and men. Men have a lower life expectancy as compared to women. It's empirical evidence.
Correct.
Smokers, non-smokers. Then if you have specific health conditions, then I'll put a loading on your premium. I'll say, if you have diabetes obviously in the long run reduces life expectancy. I'll allow for that. You'll also look at other things besides health. You look at your occupation. If I'm a miner or a police officer, my chances of, mortality is higher.
Yeah.
If I do bungee jumping a lot, my chances of mortality are higher. So I'll allow for all of those in the underwriting process and then come up with your premium.
Very interesting. So you're saying that a bungee jumper at the age of 25 will have a higher premium than a bank employee at the age of 25.
Yes. All else being equal.
Folks, you can make what you want of that, but this is mathematics and probabilities out here. And you've got a point. Someone who's doing bungee jumping or who's a Formula 1 driver versus someone who's going to just sit on a desk for the rest. I'm not passing opinions on your, careers. I was just talking about probabilities and that actually is what.
Yeah, and this is all empirical. We only deal with data. This is all not hypothetical situation. We deal with this data and we figure out.
Yeah, I mean, it's interesting, right? Because God forbid, if an event happens, that's a very emotional thing.
Absolutely.
And so empirical and emotions ka clash hota hai to thoda sa.
Okay.
You spoke about smoking and health issues.
Yeah.
This is a point that comes up a lot. Lot of people, when they're filling up the form, like to hide this stuff. I'm a social smoker. I'm a social drinker. They might be having 5 pegs every second day or something.
Okay.
But I'm
true.
a social, whatever. Can you talk about that for a while? Why, a lot of people think that if I declare this, I will either not get insurance or there'll be a rate up. Rate up,
rate up higher premium.
For our listeners, Akshay will explain what is a rate up. Can you just walk us through this?
Sure.
Because I've seen a lot of people kind of just getting very edgy about this process.
True.
Why is it important? What is the effect? And why does insurance really not change even if you do this?
Okay. So basically, insurance as a concept is based on the principle of utmost good faith. That's the basic underlying principle of insurance. And why it's important to fill the form properly is because, you are actually trying to cover your liabilities in case you're not there. The last thing you want is that when it comes to the claim, when the family is already dealing with a lot of emotional stress, a lot of grief, and they're expecting at least this bit is sorted because my breadwinner insured himself, or herself for that matter, the last thing you want is the claim getting declined, right? So it is extremely important to fill each and everything to the best of your knowledge, Now, that doesn't mean you need to exactly remember how many pegs of whiskey you're having every week. You can give a rough idea. So, those things are, hygiene. That's fine. Yeah. But if you have diabetes and you don't tell the company you have diabetes, you are really risking the fact that the company, could consider repudiating your claim when it comes to, when the claim actually comes. So, जिस चीज़ के लिए आप सेव कर रहे हो, अगर that thing happens and you are not able to take advantage of it, the whole thing goes for a toss. So always declare it truthfully to the best of your abilities and ensure that, you're just ensuring that the claim will get paid if ever, God forbid, that situation were to arise. Hopefully it doesn't.
What is the rate up? I mean, when I declare this and when, my agent comes to me saying that you are going to pay 100 and boom, suddenly I actually was truthful, mera hi band bach gaya. I mean, how do rate ups work? And why should you still pay that extra premium?
So, rate up theoretically means that if your risk is more than the generic insured population, then you will get a rate up. Now, actually, rate ups have improved over time as our knowledge of mortality, of life expectancy changes. Now, for example, many years ago, asthma would have caused you a rate up. Like, for example, I'm asthmatic. When I took my first life insurance policy, there was a 50% rate up, which meant that if you would have paid the premium of 100 rupees, I would have paid 150 rupees, right? But many years later, I bought another insurance policy and the rate up disappeared. Because, over time we figured out with the data that, asthma is not a life-threatening condition. It might make you huff and puff, but it's not going to really hamper your life. So these things have also improved over time, so always disclose more. And, a lot of lifestyle conditions probably don't require it, like asthma, for example, or even diabetes may not require, if it's a very well-controlled diabetes, may not require it. So, it's better to disclose always.
Small break. The tapping is fine? Yeah. Okay.
Sorry, who's tapping? I'm tapping.
No, on the desk. Usually we have some... No. That's fine. That's what I just wanted to ask him, whether it doesn't go into the sound. Okay, coming back in 3, 2, 1. Now, I want to come to claims ratio because, COVID was a terrible time. A lot of people... Oh, you went through,
I had COVID as well.
Oh my God. Okay.
Especially in Delta, which was bad.
I hope that it was bad, but,
No. Thankfully, that situation was bad then. So thankfully, I managed to, and the family managed to scrape through.
That's good for that.
That's good.
And in that process, when people filed claims, whether health, whether life, there were a lot of nasty surprises. People probably didn't realize it because insurance is still a slightly technical topic for people to understand.
Correct.
Life to be simple, health to is another
game.
What is claims ratio? How important is it? And in your experience, what are the top reasons why life covers, when it comes to payout, they are rejected?
So claim ratio is important because it gives you an indication that how likely is your claim expected to be paid if at all a claim happens. It at the company level, really. So it's just a very broad indication. But it's a good thing to be in the public domain because then that puts pressure on the company to ensure all genuine claims are paid, right? So it's actually a good thing from a customer perspective. And, most companies are hovering above 90s, 90, 95. So, the competition, the good thing in India is the competition is really stiff. So companies will ensure that all genuine claims are paid and the claim ratios remain high. So that's just a broad indication. So it's good to look at it when you're selecting your life cover. See that, it's not an artificially low, but, you won't find it anymore because most companies are pretty good at claim payments. The second thing, okay, you asked, why would a claim get rejected?
Top reasons.
The biggest reason is medical non-disclosure. You have something you don't disclose, especially if you're undergoing treatment for it. For example, if you have diabetes, you're on pills and all, disclose, right? Or if you have slightly more serious conditions, disclose. The good point about in India is that, after 3 years, unless it's fraud, as per the regulations, a company cannot repudiate a claim.
I was just going to, that's right. Yeah. Because if someone is, say, taken, at 45 and at 55, he's got everything.
No, that is fine. Yeah. This is at the what I'm saying, disclosure, it's only at the inception stage. Even if the next day you have something, it's fine.
Sure.
As long as that day you didn't have it.
Yeah.
But what I'm saying is after 3 years, a claim cannot be repudiated as per law.
Correct.
So that's a good thing. But the 3 years period is to ensure that there are no frauds. For example, you have cartels operating where people are on deathbeds and made to buy an insurance policy so that, insurance companies can be taken for a bit of a ride. So back to the thing, it's mostly non-disclosure. So that's why it's important to fill the form. The frauds are like people buy policies on people that don't exist. People buy policies on dead people. So obviously those things will get repudiated. But non-disclosure remain the top reasons.
Let's get into frauds, okay? Because you get a lot of this stuff.
Yeah.
Sure. One of my favorite questions that I keep on getting a lot on social media is suicide. How does that work? That someone just takes a policy for the reason of, whatever.
Okay.
Leaving behind something. Okay. How does that work?
So basically what happens is, as per law again, suicide is a standard exclusion in life insurance product, but only in the first year. So if you, commit suicide in the first year, then
hey, trigger warning, guys. This is not a recommendation. Please just a question that was there on top of my head. Believe me, people ask it, and for the sake of asking, I say, please don't think this is any bright ideas I'm giving out.
No, don't do a majboor.
I have asked this before. I'm going to come to that for a minute. I've asked this before in older episodes. Okay, so if you guys need a trigger warning. Okay, do not commit suicide. Sorry, go on.
So it's only for the first year. After that, the thought is that it was not planned. So insurance was not planned to be taken for suicide because it's a year's gap. And after that, if God forbid somebody gets so stressed out and does that, claim will get paid.
You dropped a filmy reference. Go into that. I love that. Okay, because you said Majboor. Majboor was a Amitabh Bachchan.
Yes.
Starer in the 70s, if I'm not mistaken.
Yeah, that's correct.
Go on, just go with that.
So basically this
Majboor being, I'm having a Bollywood reference in a Paisa Vaisa, I'm just thrilled. Go on, please.
So basically I remember this guy was trying to, and I've seen this movie a while ago, but he was trying to basically get insurance because either he was about to die or something, and he was trying to figure out how he can, provide for his family. To ensure that, when he goes away, the insurance company pays a lump sum.
So that's how it's not going to work.
That's a bad idea.
Okay, folks. Now that we've got the hairy stuff out of the way, again, like I said, trigger warning. You mentioned about how our financial requirements change over time.
Yeah.
25, 35, 45, 50, whatever. So someone who starts life insurance at the age of 25, can you just go into longer term? How does that shape out for him? What should he keep on doing? Should he keep on reviewing, etc., etc.?
Yeah, so absolutely. So when you start at 25, theoretically you can buy more cover at that point in time, but it's also expensive and you also have limited income, right? You have to pay for it, right? So typically you'll start small, and then as your liabilities increase, when you get married, when you have kids, you should always review your cover and see that do I need to top up. For example, a very thumb rule is that we should have your life cover should be at least 10 times your salary. So your salary will increase, right, over time. So you should always ensure that, you keep on reviewing your cover. So that's point number one. Secondly, a lot of needs probably don't strike immediately. You don't even know whether you're going to have kids. Why start saving for them? One might think like that. So, some needs will only come up in the later part of your working life. Retirement, while you can probably start immediately, but maybe you want to start a little late because maybe you don't have so much disposable income. So always review your needs and your cover amounts and then decide. And there are some products which are only available later. For example, an annuity, which is basically instead of with a lump sum, you get an income for the rest of your life when you retire. You can't buy it right now. Now, what will you do buying it at 25? You only buy it at 60.
I'm going to come to that, to those products also in a while. But I just want to get the term cover out of the way.
Okay.
How easy or difficult is it to increase cover as you age? I think some point of time you'll have to also give a medical test if...
Yeah.
How does that work?
So basically, every time you want to go for a term cover or an increase in term cover, the company will assess how much is your existing term cover, what is your age now, what are your medical situations now, or if, and any other conditions and stuff like that, and decide how much cover to give you. An easier way to manage this is to buy, and thankfully in India, we have this covers available. You buy an increasing cover. Like for example, when I bought insurance at 35, which is a little late, but suppose I bought it at 35, I bought an increasing cover policy. But the cover automatically increases by 10% every year.
Huh.
So then you don't have to worry about your...
These products are there.
Yeah, very much so.
But the premiums would also increase, I guess.
No, premiums are level. They're taking... So your premium, I will allow for that increase in cover the premium itself. So the premium will be higher than a flat cover. But the good point is you don't have to give evidence of health later on. At 50, you don't know whether you're going to get diabetes, right?
Correct.
So might as well, get an increasing cover right now. So you know that your insurance needs are taken care of.
I just remember this increase in premium.
Yeah.
There are a couple of things out there.
Okay.
One, I think, is GST or something that just came up.
Okay.
And I think the second is at certain ages, once you cross a certain, I think it's 45 or 50, I don't know, premium in any case increases. That's the impression I've got. Is that true, false?
So premium will increase with age every year when you buy the policy. So once you bought the policy, premiums are level.
Okay.
So we allow for that.
Oh yeah, that's health insurance. Sorry. I think that happens.
That's health insurance.
That's health, not life. Life is kind of you're sorted for life.
Yeah. Very much so. And GST is an additional thing which you have to pay because of the government requirements.
Yeah. Sorry, I kind of got mixed up between my health and life out there.
No issues.
Okay, let's get into this annuities part. I think we're kind of done with the pure risk, the cover, term cover that we've got. A lot of funky things out there now. At one point of time, you used to have only ULIPs. Okay.
Yes.
And of course, LIC had endowment and a whole lot of other products.
Yeah.
But now with interest rates where they are, okay, savings plans, that kind of stuff. What's your view on that? Because there are some people who believe that you should not mix investment with insurance. Okay. Keep them both aside. Why do you want to mix them? Because you can get the best of both worlds with by investing separately in both. Any thoughts?
So, there is a school of thought which echoes what you've just said. But frankly speaking, there are advantages of buying savings products under insurance, in the insurance wrapper. For a start, it's tax-free. In traditional products, up to 5 lakh, they've just changed the rules now. But if your premium is under 5 lakhs a year, your insurance proceeds are tax-free. Right? That's point number 1. Point number 2 is traditional insurance products give you a guarantee. No other financial instrument will give you a guarantee. For example, if you buy an FD rates change. If you are into mutual funds, obviously returns are linked to the market. So returns are guaranteed, and you have to actually see to believe the kind of returns we are offering in insurance product. I just bought a product in March which gives me a 7% return guarantee tax free for the next 15 years.
15 years, that's what.
Not heard of before. So a lot of advantages from that perspective. Even ULIPs are advantageous, because one thing which insurance products do is that they get you into the habit of regular saving, because the premium will have to be taken out every year. If you do ad hoc, like FDs are probably ad hoc and stuff like that. So, you may or may not save. So that's one thing which is taken as a thing for insurance. One last thing I would say is there is another feature in savings insurance product called waiver of premium. We basically say that if something were to go wrong to you, not only will your nominee will get a lump sum, the insurance company will pay your premiums for the rest of the term, so that whatever you saved for, whatever you hope to save for, will still get achieved. So that's an additional element of protection which insurance savings products give you, but again, other products will not.
Yeah, the savings products. I mean, folks, that's not for term covers. That's for savings product. I guess if that gap happens. Okay. Anything else that we've not covered? You think that that we should look at? We've done savings plans. We've done risk covers. Go on. Add-ons. So what do you think are, some add-ons that all of us should consider?
Sure. So a couple of add-ons I think we should definitely consider. One is critical illness. So basically what a critical illness product does is give you a lump sum if you get one of the 40, 50 all listed critical illnesses. Now, there is a reason why I would say that it's important, because Mediclaim is very expensive. 5 lakhs of Mediclaim will cost you a lot of money, or 10 lakhs of Mediclaim will cost you a lot of money. And Mediclaim is indemnity based. So when you go to the hospital, you raise some bills, then you get the claim back. So because Mediclaim is expensive, the amount of cover is not a lot. Whereas critical illness will give you a lump sum if that thing were to happen, irrespective. So what do you do with that money is your prerogative. Correct. You want to use it for treatment, you want to use it for running your house while you're getting treated, and we will not ask you questions, ki show me your bills or stuff like that. So critical illness is a very important add-on.
Okay.
And it's not so expensive also. So it's cheaper than Mediclaim. So definitely look at that. Other than that, waiver of premium can be taken as an add-on on a lot of places. It's very good because your whatever you chose to do is going to be taken care of irrespective of whatever happened to you. And then you can look at disability cover as well. But okay, I would say. But critical illness and waiver of premium.
Accident?
So accident, if death were to happen in accident, obviously that's covered in your basic cover. If disability were to happen, you can take something called accidental disability cover, or in India it's known as accidental total and permanent disability, ATPD.
Sure.
You can take that. It's again pretty cheap. It's not very expensive. So another thing to be considered.
Understood. Yeah. So that's it. We are done. My favorite part of the episode comes right now. Go for it. What are your recommendations? Because before the show we were talking a lot about Bollywood. What are your recommendations?
So a bit on the finance bit first.
Let's get the boring part out.
Let's get the boring out of it.
Yeah.
So I would recommend whosoever, if they haven't done their financial planning and if they haven't considered life insurance, do your research. Talk to people, you can go to our company's website, Canara HSBC Life Insurance website. Yeah. We have lots of information available, and then decide as soon as possible what you need to create as a portfolio from life insurance, and then start investing or insuring accordingly. That's an extremely important thing I would urge everybody to do, given the environment we are in. So that's point number one.
What about agents out here? How do you do you think that the advisory industry today, I mean, at one point of time, LIC was sold only through agents, when life insurance was meant. Now, LIC. I think that some of it is also direct, but direct versus advisor, what do you think?
So, the product is going to be the same, frankly speaking. But again, the agent is associated with one company. They will try and push you the product of that particular company. Which is fine. It may be a great product, frankly speaking, but it's important to do your research add-on and talk to people, talk to a range of people.
Sure.
Because, life insurance is a decent amount of money being involved, and the insurance company is selling you a promise to pay something in 20 years. You don't want to make a mistake here. Decent amount of money is long-term, guarantees involved. No mistakes are preferable. So talk to a lot of people, talk to preferably people who and then figure out exactly what you want to do.
Sorry, you were going on after that about... Are we done with the boring part?
Yeah, we're done with the boring part.
Kya baat hai? Chalo. Let's go for the other stuff.
So I was, as I was mentioning before, and that's where the Majboor reference came in. I've grown up watching Bollywood.
Very nice.
So I am very interested in Bollywood cinema history. So I read a lot of books on that. So the book I'm reading right now it's an biography of Devika Rani. It's called The Longest Kiss.
Wow. And why is it called The Longest Kiss?
Because she holds the record of the longest on-screen kiss at least in the Indian cinema, if not the world cinema.
For
Karma in 1935 with her husband Himanshu Rai.
For the movie Karma in the year 1935 with her husband. I mean, wow, okay.
Yeah.
Go on, please go on.
So that's interesting. There's another book which is called Stars from Another Sky. Highly recommended. It's by a guy called, very famous author called Manto, Saadat Hasan Manto.
Of course.
And it's about the Bombay film worlds of 1940s.
He was part of that.
He was part of that, so hence he's written. And it is so scandalous that you won't believe that those sort of things existed when...
Is that right?
Yeah.
Okay.
So, what you think right now is scandalous, this thing was at par, if not worse. Or more, I guess.
Did you see Jubilee then on Amazon
I am
Prime?
seeing it.
You haven't?
I am seeing it.
What do you think of it so far?
Not bad. So they've tried to show it in a decent way and,
You think they're historically accurate?
reasonably, but I haven't reached that stage yet.
I'm just thinking of the big studios of that era, because there was obviously, there are a lot
of
Bombay
Talkies, which is the biggest one, which was in Malad, I think, if I'm not mistaken, and that's where all the big heroes came from and the heroines came from. So it's even if it's an attempt, it's a good attempt. I feel nobody's done this before in the OTT series.
I'm just kind of. It's good to be someone who's passionate about this, because most of India's silent movies don't exist. And you can probably get them on YouTube and all that. That's a different thing. But if you want a reel, put it in a theater and watch it, which is how I believe movies should be watched, by the way. And I won't apologize for being an old school guy. They don't exist.
Yeah, unfortunately, that's
kind of tragic.
So we have this film, National Film Archives of India,
which is I know it's
in,
recently
I think, Pune
opened.
or Delhi, Bombay somewhere.
So NFDC's got a film museum on.
No, that's there. But there's a National Film Archives of India, which actually tries to restore old prints.
Yeah.
So they do have some old stuff, but I haven't seen it. But I've heard that they have some old stuff.
I wish them all the best. I know that I saw Dawn last year when it was Amitabh's 80th.
It was 80th. That's right.
So and that was a totally different experience. And I would love for this to go into a Bollywood episode. But any other recommendations? Do we wrap up?
No, I think these are some books I read. I just read I read a lot of travel books also.
Go for that.
So I read this book called Borderlands, which is about all the towns, a lot of towns on the border of India, and the kind of life they have to live as opposed to people living in main town. It's quite interesting. So it's by Pradeep Damodaran. Go for that also.
Okay, so we've got 3 recommendations, folks. How excited. Do you travel also?
Yes, and I do some quirky travels. Like in February, I went to Punjab.
Okay.
And I covered each and every border retreat ceremony at 3 points in Punjab in 3 days.
And which would those be?
So there was Atari Wagah border, which is very famous. Everybody knows about it. Then there is Hussaini Wala border in Firozpur. That's the second. And then there is Sadki border near the southern part of Punjab. That's the third.
Amazing.
Yeah.
Any other quirky destinations?
So I have been to a place called Trinidad. Which
anybody who's played cricket knows where that is.
Yeah.
Come on, here.
But what you don't know that 40% of Trinidadians are ethnic Indians.
Yeah, I know.
And if you go to Trinidad, you realize it's really far from India.
That's what's going to be my next. So how do you reach there?
I went from the UK, so it was a direct flight, thankfully. But in India, you probably have to take 3-4 flights to reach. But, there's a place in in Port of Spain, which is the capital of Trinidad, which is named after Indian cities. So there's a Bengal road, there's a Bombay road, there's a Delhi road, there's a Madras road, there's a Patna road. So you wouldn't know that, right?
Yeah, I mean, do you have an Instagram account that our listeners can follow? Because all of this sounds like really fascinating. And since you do all this, my logical and last question, by the way, is food. I mean, if you've traveled so much, I'm sure you've had food also a lot. So any recommendations out there?
So even Trinidadian food is very interesting because it's a hodgepodge of Indian food mixed with Caribbean style. So there is something called doubles, which is like available on a roadside cart in Trinidad. It's like the morning food. So for example, in Bombay, you'll go and have vada pav.
Yeah.
In Trinidad, you'll go and have doubles. And doubles is basically one puri over cholas and then some tamarind chutney and another puri. And that's called doubles.
I thought you'd go with bunny chow, but
No, this is what it is. So,
doubles.
Interesting stuff.
What do you eat in Punjab?
What do I eat in Punjab? Dal makhni, butter chicken, makki ki roti, sarson mein saag.
Any places out there? I mean, a lot of hole-in-the-wall places out there that are like street food. There is.
Let's go to Amritsar. It's like a haven for foodies. Go to kulcha land for kulchas. Go to makhans for fish. Go to biras for chicken. It's like the works. You will stay there forever. Yeah, and you will not put on weight also.
I know. And I will not stay here forever because this thing is going in different direction. But wow. That is a wrap on this episode. A very exciting episode of Paisa Vaisa. My guest, Akshay Dhand, appointed actually.
Thank you.
Canara, HSBC Life Insurance. Akshay, thank you for everything, for telling us about what actuaries do, how our listeners can do that, for all the stuff that you said about life insurance, for the book, for the movie, and of course the food recommendation. Thank you so much for doing this for our listeners.
Thank you. My pleasure.
IVM